This episode is sponsored by Learn Better Tutoring and Educational Services. All services start at just $5. Learn Better Tutoring is online based to keep their prices low and affordable and to serve clients anywhere in the world. Email now for a free academic consultation at learnbettertutoring@gmail.com. Learn Better Tutoring. Learn better.
Welcome back, my awesome people. In today's episode, I will be highlighting the defense stocks that will do well during global conflicts. This is part 2 of a 2-part video where this is part 1 and where I will be discussing 3 stocks in each video that are wartime cyclical stocks, but definitely stocks that you can take full advantage of during this time of conflict around the world. So back in 2020, defense stocks performed pretty weak, but started gaining momentum in 2021 with the departure of American troops from Afghanistan. The Biden administration's first Pentagon budget was unchanged from Trump's presidency, and with a renewed focus on modernization and research, funding for defense contractors will trend higher in the coming years. Investors often associate defense with current global events, and that makes sense, right? It's wartime, so war stocks will obviously go up. But while there could be some added sales of munitions and weaponry during conflicts, investors should avoid buying defense stocks based on that thinking. Because given the long lead times for programs and the strong consensus behind investment in the military, you can ignore the political noise and focus on finding the best run defense businesses. Defense and cybersecurity stocks are seeing a sharp rise in values as investors take note of pledges by various governments to boost defense spending, and governments warn of an increased threat of cyber intrusions following Russia's invasion of Ukraine. US stock markets keep seesawing as the war in Ukraine escalates, as most of the major US markets are closing lower and lower. But defense companies continue to gain as investors bet their businesses would benefit from the current conflict. So it is safe to say that the current war that we are in, which will certainly escalate, will continue to further push defense stocks up. And for more strategies and tips on money, investing, and trading financial independence, follow me on my Twitter at Jacob Rant and get bullish on that subscribe button for the YouTube algorithm and smash all the likes and bells to get updates on all my many fantastic investments. And comment below with what you think of defense stocks. Are you into it or not? And if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with and $0 commission fees that won't eat into your profits, especially if you're buying penny stocks, sign up with my Wealthsimple link down in the description box below, where you will get $25 of free real money to trade with. Link is below. So the first defense company I will be highlighting in this video is Raytheon Technologies, ticker symbol RTX. Raytheon doesn't make warships or fighters, but it has a role in a wide range of important military platforms led by other contractors. It is the product of the merger between Raytheon, a defense, electronics, and missile specialist, and United Technologies, which makes aircraft engines and a variety of other aerospace parts. For those that are not aware, Raytheon and United Technologies merged back in April 2020 for an approximate $100 billion to become Raytheon Technologies. The new company has a market cap of $142 billion, and the company reported Q4 sales of $17 billion. Raytheon Technologies specializes and is known for electronic systems and missile systems. Missile defense systems are in high demand, making Raytheon one of the best defense stocks as threats from China, Russia, Iran, and North Korea become larger priorities for the United States and its allies. Raytheon builds the Patriot missile, their prized and most sought-after missile system, along with the interceptors for the Aegis air defense system. Raytheon also produces an array of missiles and munitions, perhaps notably the Tomahawk cruise missile. Raytheon is a leader in radar systems and electronic warfare as well, and it is also ramping up its cyber defense capabilities. The future looks very bright for Raytheon Technologies as they seek to create highly advanced assets for the highly advanced technological society that we currently live in. So my awesome people, make sure to put Raytheon Technologies on your watch list because this company is a staple in the defense sector. And with its recent merger, it is only getting bigger. The second defense company that I will be watching is General Dynamics, ticker symbol GD. With a market cap of $60 billion, General Dynamics is a massive company, and with that market cap comes a revenue of $10.3 billion just in Q4 and $38.5 billion in 2021. General Dynamics is one of two primary military shipbuilders and has a portfolio of tanks and land vehicles that make it one of the go-to vendors for the United States Army. General Dynamics also has one of the largest defense-focused IT and service businesses, giving it some revenue stability at times when governments start cutting back on equipment purchases. In November of 2020, the US Navy awarded General Dynamics a $9.5 billion contract to build the first Columbia-class sub, the Arleigh-Burke-class destroyers, and the Zumwalt-class next-generation destroyer. General Dynamics also builds auxiliary and support ships for the Navy, plus oil tankers and dry cargo carriers for commercial properties. So many things. And General Dynamics is a top provider of land weapon systems too, building Abrams tanks, the Stryker family of vehicles, and light armored vehicles. The company's Gulfstream business jets lead the aerospace segment, which includes a business aviation services division. So as you can see, General Dynamics isn't so general, as they build and specialize in creating valuable military and commercial assets for various governments. So my awesome people, make sure to put General Dynamics on your watch list because this company is a beast in the defense sector. And the third defense company that I will be watching is not really a company, but instead defense sector ETFs. For those that love ETFs. If you are bullish on the defense sector but would rather not choose among individual companies, you can buy shares in one or more ETFs that cover the defense sector. Regardless of the defense sector ETF you choose to go with, almost all will have the defense stocks that I highlighted in this video, part 2, and the last video, part 1, as these companies are one of the biggest and most advanced in the defense sector. So the three defense sector ETFs that I believe are the strongest in terms of growth and dividends, and ones I am adding to my watch list are Invesco Aerospace and Defense ETF, ticker symbol PPA, the Spider S&P Aerospace and Defense ETF, ticker symbol XAR, and the iShares US Aerospace and Defense ETF. All three of these ETFs include the 6 defense companies I mentioned in part 1 and part 2, and will also give you the opportunity to increase your exposure to the defense sector through non-military related companies. So, Jacob Rant, are you buying these lethal, murderous companies or what? Well, my awesome people, no, I am not. I have never wished to put any defense sector companies in my portfolio, but that is not to say that I won't. It has nothing to do with the weapons and what it is used for, such as war. It is really about knowledge and experience about the military world. I personally don't know much about the defense sector or workings of the military. So because of that, I stayed away from the defense sector. However, with everything that is going on currently, there could be some great opportunities for swing trades in this sector, as there could be some volatile moments and low entry points. And remember, my awesome people, just like all the investments I mentioned in my videos, please do your own due diligence because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with at $0 commission fees that won't eat into your profits, especially if you're buying penny stocks, sign up with my Wealthsimple link down in the description box below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I post my penny stocks, REITs, dividend, and speculative stocks from my portfolio and other investments I am currently buying or selling. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting.